Welcome to Wall Street Insights. This week, the market narrative got completely flipped on its head. Widespread anxiety about an economic slowdown, that gave way to a powerful Friday rally. And it all came down to the market believing it heard one key message from the Fed.
So what was the catalyst that lit the fuse on this market-wide frenzy? Well, it really boils down to one person and one speech that had investors scrambling to get back in. Now, this chart is really interesting because it shows a key structural split in the market. You see the Dow surging 1.53%, hitting an all-time high. But at the same time, the tech-heavy NASDAQ actually finished the week down 0.5%. So what does that tell us? It suggests that while the overall mood improved, tech investors might have been taking some profits off the table after such a strong run this year. Okay, so with this surge, where did the money actually flow? We saw this renewed risk appetite show up in two key areas. First, the U.S. tech giants, and second, some high-growth Chinese concept stocks listed in the U.S. The breadth of this rally is super telling. Over in the U.S. market, sentiment was really led by high beta names like Tesla and NVIDIA. That's your classic risk-on indicator. At the same time, the sharp rebound in stocks like NIO and Miniso just goes to show how sensitive these Chinese names are to global macro shifts. They often act like a leveraged play on investor optimism. Let's take Tesla, for example. The stock jumped over 6% on Friday alone, and there were a couple of catalysts here. First, they struck a new tech partnership in the crucial Chinese market. And second, they hiked the price on the Cybertruck, which directly addressed some of the market's profitability concerns. And then look at the Chinese concept stocks. The EV maker NIO surged over 14% on Friday. Now, this move wasn't driven by any specific company news. This was a pure sentiment play, riding the wave of the better macro environment and some positive buzz ahead of their upcoming earnings report. And this momentum wasn't just a one-day thing for some stocks. Miniso, for instance, was up over 20% for the entire week. That kind of performance really reflects a growing confidence in their global expansion strategy, especially right before they report earnings. All right, so let's dig into the why behind this explosive rally. It really traces back to two key market-moving events from last week. This is it. The whole market pivot hinges on this one sentence. It all comes down to this line from Fed Chair Jerome Powell at Jackson Hole. When the market heard him say, a change in the balance of risks may require a policy adjustment, they immediately took that as a clear dovish signal, a green light, really. Just that one sentence was enough to erase a lot of the market's fear about a persistently hawkish Fed. All of a sudden, the possibility of rate cuts was back on the table. It reignited investor optimism and forced a reevaluation of stock valuations, especially in those rate-sensitive tech sectors. And look, Powell's comments didn't happen in a vacuum. They were backed up by some solid economic data. The preliminary PMI numbers for August came in surprisingly strong, with both manufacturing and services beating expectations. This combination, dovish talk from the Fed plus strong data, really bolstered the growing belief in a potential soft landing for the economy. So now that the market's core logic has shifted from fearing a recession to hoping for a soft landing, the big question becomes, what's next? Which data points are going to either confirm or challenge this new narrative? The focus is now shifting away from just Fed speak and becoming much more data dependent. The market is going to be watching two things very closely. First, key economic data like consumer confidence and new home sales to see how healthy the consumer really is. And second, corporate earnings. We need to see if company outlooks actually line up with all this renewed macroeconomic optimism. But, fundamentals and Fed talk don't tell the whole story, especially for those Chinese concept stocks that saw such a huge rally. The geopolitical relationship between the U.S. and China remains the single biggest, most unpredictable long-term variable out there, one that can easily overshadow any domestic catalyst. And this leaves us with a critical question as we look ahead. An economic soft landing might be in sight, but can the strong fundamentals and attractive valuations of these Chinese stocks continue to outweigh the persistent undercurrent of geopolitical uncertainty? That remains the key risk to watch. And just a quick reminder, our analysis is for informational purposes only and should not be taken as investment advice. Markets are risky, so please invest carefully. So that's our deep dive for this week. If you want to keep tracking how these themes, the Fed pivot, the soft landing narrative, and geopolitical risks play out, make sure you're following our official account, Wall Street Insights. And if you found this breakdown valuable, please give us a like and share it. We'll see you next time.